Morning, Steve Free in Chicago with the morning grain comments. I hope everybody had a nice and safe weekend. It's kind of raining here in Chicago. I think there's some themes and headlines overnight that has grain sharply higher. First, we have been talking for weeks about the possibility of Ukraine grain and sun oil exports. But over the weekend, Russia bombed two key ports and damaging grain elevators. So that sets us back a little bit as far as getting some kind of positive news on Ukraine exports. We also have been talking about favorable U.S. weather. For the next 7 days, most of the Midwest is going to see good weather with normal rains, cool temperatures in the north, warm temperatures in the south. But there is some ridging that's developing on day 11 and 12 across the south central U.S. The jet stream continues to be very active and fast, which reduces the chances of this ridge locking in. But as we get closer maybe to the end of June or July 1, if the ridge jet stream does slow down, the ridge could develop, especially over the southern plains, the Delta, and the southeast. We also know that China is reducing some of its COVID restrictions, and that has many commodities higher, thinking that China could increase commodity imports. We also note that because of potential higher demand and maybe a little bit lower supply, the crude oil is testing 120 a barrel. Some people think the next test is 125. Summer weather, increasing demand for energy could test 147, previous high, and this winter could test 170. So that continues to offer support to commodity index and commodity prices. We're also watching really closely the Fed action. There's talk about 50 basis point increase June, July, and September. Some people think they may make 50 basis point increases in 2022. But still, people feel that that may not be enough to stop inflation. Stock market's up after the jobs data report. Today, we get our first corn crop rating, and also we'll just kind of see how the planting pace is going, especially in the north. We also note that this week we got the USDA. People are not expecting a lot of changes in USDA numbers. Privately, most people are using a 200 bean carryout for both old crop and new crop here in the U.S. The old crop corn carryout could be down 100 million bushels because of increased demand. But 22-23 is still kind of up in the air as far as possibility of more acres and maybe a higher yield than what the USDA is currently using. So you have a big spread between a 1,200 carryout and a 1,600 carryout. And that makes a big difference as far as D's corn is concerned. Technically speaking, we're back over $17 in the beans. We are, I think, eventually going to test $8 in the nearby corn. And I think we'll test $12 in the nearby wheat, and could even go higher post-harvest with the fact that we're seeing a lot of talk about lower wheat supply and the fact that commercial buyers are short. As always, these are my thoughts and not those of ADM Investor Services, and have a good trading day.